Hello again, I'm David Maurice, fee-only certified financial planner for Worthwhile Wealth Counsel.
And I'm Andrew Worley, Associate Advisor here at Worthwhile Wealth Counsel. So David, let's get everyone caught up on what we saw in our weekly market performance reports because we have another discussion about seesaws. We may have a third one appearing.
Okay, so last week, Andrew, we saw Valiant small caps were up the most. Again, small value was up almost 2%, and small growth a little over 3% for the week.
And mid caps, both value and growth, saw some progress inching upwards, but large caps slipped just a little.
They did. Foreign stocks were up again, with emerging markets leading, up almost 2.5% on the week.
Now, do I have to be the one to talk about bonds again? They're just so embarrassing.
Well, Andrew, you're so reluctant, I don't even know why you bring them up.
You're right, but here goes nothing. Our bonds are still totally bewildered. As I said, they're just embarrassing.
So that's a quick look at the performance report for the week. Now let's turn to those seesaws you mentioned. You know, we've watched this amazing reversal of small stocks overtaking large stocks during this year.
Yes, and the second seesaw we're watching is the value stocks moving ahead of growth stocks. At the extreme, we saw small value stocks trading places with large growth stocks.
A total reversal. And this week, Andrew, we may be seeing the beginning of a new seesaw pattern between U.S. and foreign stocks. You know, U.S. stocks have outpaced foreign stocks basically for the last decade. But if you look at the one-year trailing period going back to that bottom, the foreign stocks are hitting new returns of 40 and 50, even 65%.
And as you know, David, a client asked why the market's growing like this. It feels disconnected from reality.
It does.
People feel this market is going to crash, and of course, they're hearing a lot of that.
It's all out there.
This market just can't keep going.
I know, it's the hangover or the fear of the pandemic and the destruction that's gone on. It's absolutely true. It's like the Great Recession that we had back in 2008 and 9. That was followed by the longest bull market in history. That poor bull market, Andrew, couldn't get any credit. I named it the Dangerfield Bull. You remember Rodney Dangerfield. I can't get no respect.
Well, that does sound like you, David. But as to your comments about the market, I think this is encouraging news. If you think about COVID and all the destruction of businesses and the economy, it dug a huge crater. I mean, just look back at 2020.
It's horrible.
It was a tough year.
It was.
Yet stock markets around the world have not just climbed up, but they're shooting up with historic returns.
I know, it's true, Andrew, and to me, I see this market painting a living picture of the dynamic renewal across the globe. We were supposed to have been taken out, knocked down by the COVID, but everything, including the economy, not just the market, is roaring back. This recovery is going to be written about in history for decades to come.
Yeah, I think you're right, David. Well, historians will know that we're not hearing through all the noise and the worry today is that powerful rebuilding of the economy you mentioned, but that's a big story for another time. Well, that's it for this week. And as always, I'm Picky.
And I'm Petty.
And
together,
we're the Persnickety
Pedants of Worthwhile Wealth Counsel.